Not much going on in the world of clean energy or AI these days, so we might wrap this up in 5 or 10 minutes, I suppose. Very, very simple stuff. Stephen Byrd, I'm head of research product for the Americas and head of sustainability research. Thrilled to be here. Thank you all for being here with us. We have an excellent panel. Just going to start with introductions, if we could, starting with Lisa and just going down the line, the work you do, your firm, et cetera.
Hi, I'm Lisa Audet. I'm the founder and CIO of Tall Trees Capital. We're a Greenwich-based investment management boutique. We invest in the energy transition, long and short. Thank you.
Greg Wasserman. I run the private climate investing team for Wellington. So we're part of Wellington, big public asset manager. And we focus on the private side for companies that are developing solutions to either help mitigate or adapt to climate change. Focused on the private side, a bit around the late stage venture stage.
Hi, Lillian Shattuck. I work for Arosa Capital and their private investments team, covering our investments in venture capital, growth equity, and as of this year, private credit. We invest across the kind of energy transition and climate technology value chain, from the very earliest companies all the way up to pre-IPO level companies.
So Marina Severnowski, I'm the head of sustainability investing for the Americas region for Schroders. And Schroders is an almost $1 billion asset manager in the UK. About a tenth of that, $1 trillion asset manager in the UK. About 100 billion of that is our private assets. That's the Schroders Capital brand. And my colleague Lee was just here on the prior panel from that part of the business. And so, we represent a couple of different things in this category, one of which is Schroders 𝐏𝐀𝐍𝐄𝐋. So I'll kind of make reference to that. And that's a pure play renewable infrastructure manager. And then, of course, we have our sort of listed equity business in energy as well. So I'm sort of speaking from both those sides.
Great. Thank you all for being with us today. I want to start this, sounds very high level, but I think we're going to quickly get into some real details. But the idea of the energy transition is one that raises a lot of questions. I think there's a lot of confusion around what we mean when we say energy transition. So for each of you all, I wonder if you could just start by what does it mean for you? Where do you focus within the transition? How do you define that overall? Maybe Lisa, if you want to
Great,
start.
thanks, Stephen. So we believe that it's important to have a holistic approach to the energy transition. So we believe that it's important that every whether you're a data center in Texas or a small business in Africa, having access to energy is key. And, so we also look at, I'm sorry, I'm just kind of losing my train of thought here a little bit.
And you've been involved in transition for a long time, right? Companies that are improving their financial results while they're
so we believe energy is just essential to our daily lives as technology. So of course, it's not just about energy security, it's also about how do we get from high carbon to low carbon or zero carbon energy. And we know that path is not a straight one. It's going to happen over a period of time. And we believe that fossil fuels will continue to be a part of the energy mix for some time to come. But, where possible, lowering CO2 emissions is a path that we believe we need to be on. One of the sort of underappreciated areas of the energy transition is this area of how technology can help reduce energy use and enhance energy efficiency. So we believe this is a sort of undervalued and underappreciated part of the energy transition, and we see AI as having a really key role in this area.
It's a good point. I mean, energy efficiency and less usage is often the cheapest form. It doesn't get a lot of attention, so it's a good observation. Maybe, Greg, next, how do you think about the transition?
Yeah, energy transition is a key part of what we focus on. It is just one of our end sectors because we focus more broadly on climate change overall. But when I think of energy transition generally, it's obviously the evolution of where we get our energy sources over time. And I think there have been quite substantial changes to date and a lot more coming. I think years ago when people first started talking about energy transition, it was largely about transitioning the energy grid and where we get our other energy sources to being more green, get to net zero and solve climate change and all that stuff. And so we've kind of, largely moved off coal. There's a lot more gas now. You see a lot of renewables coming on the grid. And so that shift from, a bit more traditional energy to a bit more renewable energy is kind of the first phase in a lot of ways. But there's also an ongoing and that will obviously continue over the next couple decades. But there's a bit of an ongoing transition that's happening as well, where our energy supply just has to react to geopolitical events, has to react to energy, to technology transformations. And so, there's been, war that's changed how Europe thinks about their energy grid. We've had, electric cars start taking over, oil and gas demand. And so that's a big shift. Obviously we'll talk about data centers and what's happening there. So that's a big shift. And so to me, energy transition is just really wrapping all of those trends into one, but there's a lot of underlying pieces to it.
Yeah, Greg, you're raising a good point. Years ago, it was all about renewable energy and just in the power space, and you're speaking to a much broader set of industries, a broader set of technologies that we now need to deploy. And some of those sectors are quite hard to decarbonize. We're going to get into that a little bit more.
Yeah, exactly.
So, Lillian, what would you say?
Yeah, I think the way that I think about the transition is both as kind of an endpoint and a continuum. I think we all understand and agree collectively as humans where we need to get to. A fundamental reorientation of the global economy away from being powered by fossil fuels to being powered by different sources. And I think the way that we get there is the continuum. We've seen a lot of leaps and bounds in the renewable energy space, in renewable power, in certain industries, but there are a lot of different steps that we need to take to continue to move forward towards that kind of desired endpoint. So there's a lot of different technologies, a lot of different ways to invest, both in mature and in early stage companies to achieve that goal. And I think we have to focus, to your point, Stephen, both on the kind of low-hanging fruit of energy efficiency, so reducing overall power need, as well as finding a new way to think about how the power that we do need is going to be kind of derived. So I think it's both what do we need, what is our desired endpoint, which is, I suppose, for most people, 2050 net zero or as close to it as we can get.
Yep.
And then how do we get there? And I think that how we get there is a lot of different stages, a lot of different steps, which opens up an enormous breadth of opportunity for investors and for allocators and for humans to kind of work in these different spaces, different technologies, different areas of the capital stack, kind of like we all represent on the stage. So yeah, I think it's kind of a fundamental transformation of the world economy.
Well said. Marina, what would you say?
I'll just layer on. At the risk of hyperbole, we talk about the fourth industrial revolution of moving from molecules to electrons. Mm-hmm. So after 200 years of combustible technologies transforming molecules into energy, now we're switching over to electricity. I think the piece maybe that I can add that hasn't necessarily been addressed yet is that when we talk about energy transition, we mean this sort of entire overhaul of the entire energy system. But it's not just investing huge amounts in renewables, it's also working very closely with conventional energy companies on their decarbonization journey. And so, we don't have kind of renewable companies over here and conventional companies over there. It's kind of a one holistic, energy system. So basically on the current pathway of emissions, as we said, is unsustainable for the planet. We need to go from 20% of the energy mix being renewable generation to 85%. And you have some huge challenges there because we obviously have to decarbonize power generation and transport. That's 54% of global emissions. Those two areas are very unsustainable currently. And then global electricity usage is obviously increasing because of population growth, overall consumption levels, AI, which we'll get into. So it's a huge amount of capital that's needed to decarbonize across that entire value chain. And again, like I said, we think about this across both renewable and conventional energy companies because they will exist. They're just going to look really different in the future.
Yeah, it's a great point. I mean, none of this happens outside of the energy industry. We have to be able to really work within that system and change, and that's tricky. I'm going to have a jump ball. Any of y'all can go for this one. It's a tough one. It's sort of threading the needle of multiple objectives. Greg talked about geopolitics, trade dynamics, et cetera. So we're thinking about an increasingly complicated geopolitical world. That's all I'll say. We're also looking at falling costs of technology, but also rising costs of climate change. We're thinking about access to clean energy to all consumers. How on earth do we achieve all of these objectives at the same time? What are some of the solutions that you all think about? What are you more excited about? Because frankly, it's daunting. Talking about Marina's point, going from 20% to 85% is an enormous lift. So how do we get there? What are some of the areas that you find most promising to achieve that?
Yeah, so I can start. So I would just say I think one of the challenges with the energy transition is getting the timing right, because I think we've kind of kind of rushed ahead and then had issues with supply chains. I mean, the wind turbine, OEM industry is a good example of, the race to build bigger turbines has resulted in, component quality issues, and the industry is still grappling, with those issues today. So I think, how do we get the timing right in an environment where we're going to have this massive uptick in demand between now and the end of the decade, driven really by data centers, but then probably in the beginning of the next decade, we actually see AI kind of kicking in as a real, force to reduce energy use and enhance energy efficiency. So getting that timing right, I think, is going to be challenging.
Yeah, I would say I think it's going to be a mix of a lot of things. If I just think about the energy transition in the context of the power grid, it's a very complicated beast with lots of different sources of generation and lots of different end pieces of demand. And I think the solutions are going to be a whole bunch of things. There is no silver bullet. Will be renewables. There will be gas that will be part of the transition. There will be nuclear. We're starting to see that pop up. So I think on the generation side, it's a lot of things. And then I think there's going to be an interesting layer of just making everything more dynamic, both on the supply side and the demand side, that really helps balance everything. And so you've already seen it starting to happen in some kind of basic ways, I'll call it, as renewables have gotten to the grid, where obviously renewables are more volatile and the grid gets spiky with late evening, early evening kind of AC demand and all those things. And so you need to match that supply demand. And so the generation stack just becomes a lot more complicated. We see a whole bunch of emerging things around making the demand and supply side more dynamic. And so, if you get a whole bunch of electric vehicles out there in the grid and people are plugging in at different times of the day, they're pulling demand, but there's actually small windows of time where maybe their batteries can put back into the grid and support short spikes. We've been seeing more recently things like Bitcoin mines getting paid to shut down in periods of time when the grid needs power, and saying, I'll actually give this power back to the grid for 15 minutes, and they get paid multiples of what they would make mining Bitcoin. And there's just a ton of examples of that, but it's really just everything more dynamic so you can meet the needs in real time, that I think adding a bunch of smarts and connectivity on the supply and demand side really will play a really interesting role in that.
Yeah, I think that's a really excellent point. And data, I know we're going to get to data, and AI is going to play an enormous part in understanding where we can make those dynamic changes, or where those elements of dynamism can emerge, because we need to plan better for how the grid is going to need to expand, or how technologies and power generation are going to need to be kind of repositioned to support the new economy that's growing, both out of the energy transition technologies that we're seeing, and just the progression of the global economy on its normal path. Well, current path, normal path might be wrong. But I think that the thing that's daunting about it, as well as exciting, is the breadth of the opportunity set. There are so many different ways you can play into the theme, kind of depending upon your kind of appetite. I think the other piece to keep in mind is that, unlike other areas of technological innovation where disruption tends to be the focus, there's a lot of the energy transition where we don't want to disrupt things. People are using power all the time right now, and we want to make sure that it's as undisruptive as possible for everyday people, so that they can carry on with their lives in the face of this enormous kind of structural change. So I think that the low-hanging fruit kind of near-term technologies will need to consistently take that into account. Obviously, industrial decarbonization kind of takes it out of the hands of, or out of the kind of general remit of the general populace. But if you're thinking about power demand, if you're thinking about, how do we continue to fund all of these new or power all these new technologies, whilst also making sure that when someone goes to turn on a light, it turns on and it's not ruinously expensive. I think that balance needs to continuously be struck, and that kind of managing to comfort, or managing to what everyone's established comfort level of power availability is really important, which is where I think a lot of these dynamic strategies and data are going to be really kind of vital for us to know at the front end what we can and can't do, and then enable the technologies that we are kind of building and funding to work towards that kind of end goal, and to keep the system still moving without too much disruption.
Agreed. Marina, anything else?
I mean,
you'd
I
add?
would focus on a couple of things. One is intermittency and one is distribution, right? So obviously on the intermittency side, because it's not always windy, it's not always sunny, they're free, but they're not working all the time. I think battery storage is one area we focus on quite a bit. It really is going to enable the kind of ability to have renewable power available 24/7. So that's one side of it. And then on the distribution side, it's very much grid capacity, kind of critical. So there's and then decentralizing. It's hard to kind of decarbonize parts of the economy that are remote, demand centers, and so the decentralization of energy delivery. Also very important to invest in. The other thing I would talk about is sort of the supply versus demand sides. And this is where we go back to kind of Schroders is a very large asset manager that does engage with the companies that we hold. So on one hand, we're trying to engage with the demand side and kind of encourage that corporate decarbonization. And the more that the market rewards companies for becoming less emissions intensive, again, like across the economy companies, not the suppliers, the less we're just kind of beating up the suppliers of conventional energy and saying you should sort of take it on the chin and stop producing, even though your customers still want what you have. So that's a challenging discussion. But again, we're kind of doing that on the demand side, and then on the supply side, we have an engagement program with 1,000 companies that we hold through the next number of years, and all of our PMs and analysts, 170 people, are really actively engaged in that in that process of engaging with those companies and working through kind of where their future capex is going, and again how they're making those changes. And they are focused on, again, sort of grid building and battery and green hydrogen and all the things I'm sure we'll touch on in this panel. So those are some of the key areas.
I think it's quite striking that all four of you talked about the demand side of energy, which is frankly rare or fairly new. 2 or 3 years ago, it would have been almost all about, it's a new trend. And for any of y'all who want to get a feel for this real time, there's a fun website, or well, fun if you're a nerd, I guess, that shows the power grid in real time. It's called gridstatus.io. If you go to that website, you can then look at every US grid and watch real time what's happening. You'll see exactly what each of you all talked about. In Texas, for example, through the day, you'll see solar power start to ramp up massively. Power prices will fluctuate wildly, especially at sort of 8 a.m. And then to Greg's point, 6 p.m., 7 p.m., 8 p.m. when renewables tail off. So it's clearly needed, and we're going to see a lot. I do want to dive into the.
I would just add to your point. A lot of people don't know this, but for anybody that has a smart meter in their house, which is probably most people, if you're in a house, not necessarily an apartment, but utilities actually give you access to that data. So you might not know that. They don't always advertise it to you, but there's usually a site where you can log in and see your smart meter data, usually in 15-minute intervals. And so you could actually pull up your house and see how your power moves throughout the day, in line with what Stephen was saying about the grid, but see how your actually house spikes. And I think people are always surprised to see, why am I using so much power at night? Or like, what was this huge spike at 12 p.m.? Like, oh, that was my pool pump kicking on. So it's always really interesting insights when you see the data.
And I find a lot of folks who aren't in the power sector can be shocked by the differentials in price. So in Texas, in the middle of the night, the price can be negative $10 a megawatt hour because wind farms are receiving a subsidy. In the middle of the day, it can spike from negative 10 to 100, 1,000, goes as high as 5,000 on hot summer days. So incredible volatility. And this goes to the point about demand, which is what all four of you all talked about. I wanted to, again, jump all, if any of you want to talk about the demand side in more detail, how do you think about addressing that side of things, different business models, different investment ideas? Lisa.
Yeah, maybe just to follow on what we've talked about around volatility. So I think it's important to understand that there's a structural increase in volatility, right? And that's going to continue for some time to come. And as we are, seeing deals between sort of Amazon and some of these nuclear generators, they're pulling, just to, kind of make the point that they're pulling that nuclear capacity off the grid, right? Which, in terms of the mix effect of what's left on the grid, is more volatile, right? It's just more renewable energy, more volatile energy. So there's a need to backstop that energy. So we're seeing, much more sort of demand going forward for gas peakers and for other forms of energy that sort of backstop the grid, given this structural increase in volatility.
Good point on flexibility. And you had mentioned, Marina, energy storage as well being a big part of this as well. It's funny, every couple of months, our updated forecast for energy storage only go in one direction. They go up because we see new just needs all over the place. Texas, as an example, the growth there is unbelievable.
I mean, what I would add, and I think this is, I think you rightly point out that focusing on the demand side is sort of a new trend. I'm in the process of writing my 2025 outlook, so if other folks have other trends that I should include, please let me know. But one of them, which is massive, and it was all over Climate Week, it was all over the UNPRI conference in Toronto a few weeks ago, is policy engagement or policy advocacy. So I think finally we've all figured out that we can sort of, we can do as much as we can on our side, but you really can't bring capital to things if kind of regulators and policymakers don't create the framework of, frankly, incentives and punishments. And so I think from that standpoint, I guess kind of on the residential side, it's obviously an incentivization of heat pump technology and sort of all the things that you want there. As I said, on the corporate decarbonization side, on that side of demand, we see three really big trends, and we've started to invest around these, which is less risk, and that's, again, kind of litigation, regulation, policy, right? So companies that are decarbonizing their demand, will face less of that risk. Cost, again, if policymakers figure out the kind of carbon price. And then a big one, which kind of less reliant actually on policy, which is nice, it's a kind of a private sector one, is about network effect. As you have the, Apples and the Amazons and these big companies leading the charge on decarbonizing, on sort of setting their net zero commitments, they kind of expect everybody who supplies to them to do the same thing. So at some point, there's a negative network effect where you can no longer, if you're an aluminum producer that's not decarbonizing, you can't no longer, deliver to BMW or whoever, right, in the supply chain. And that sort of positive peer pressure 5 years ago just didn't exist. And I think in 5 or 10 years, it's actually going to make a really big difference. So that, I think, is exciting. Again, both public and private markets need to sort of deliver together.
That's a great point. Lily.
Yeah, I think another area of demand that we haven't really talked about is power. So power is an important factor, and it's because it's demanded by not just energy transition technologies, but by kind of the wider economy at large. I think the demand, to Marina's point around kind of incentives for companies to decarbonize their technologies, is something that I am continually concerned around in kind of newer, longer dated energy transition technologies. So that if you build some form of new power supply, there will be demand for that.
That's right.
Depending upon kind of pricing dynamics. But what if you build a green hydrogen production facility? Where is the demand for green hydrogen kind of in the economy? Where is the demand for carbon capture? Maybe is a slightly easier one to answer, but there are a lot of these technologies that we get very excited about that get very trendy in the energy transition space. I'm guilty of this myself. And then you kind of think about the long-term effects without policy. What policy or incentivization or punishment? What is the driving force for companies to reorient themselves when at the current moment it's not costly to stick with the status quo? So it's both kind of peer pressure, it's both kind of customer demand, but for many of these industrial companies, there is very limited customer demand. It's just about price. So then, how do you get to price either through kind of credit systems or incentivization through, regulatory framework, or kind of a negative effect through punishment, either formally or informally, that drives that demand? Because I think power demand, if you build some form of new power source, people will come. But what if you are going to spend billions on green cement, even though it's going to be, quite expensive? Are people definitely going to buy it? I think those are the questions that for technologies that you think are probably 2035 and later, we still need to be having those conversations now.
Yeah, that makes sense. Great.
I was going to say, because it's related to demand, it's also related to what you touched on about storage, is a huge explosion of backup power. Every time one of these hurricanes come through and people in Florida are without power for weeks, they go get a generator.
Yes.
And, if they didn't do it last time, then it happens again, they get it the next time. And so there's been this huge spike, and I think it's something that will continue and probably become somewhat standard over time, is backup power, both businesses and homes. Historically, it's been generators. I think with battery cost downs recently and Tesla Powerwall and stuff like that, you're seeing a lot more batteries come up. And so, people's ability to meet their demand when they need it is a big part of it. And then there's a lot of interesting opportunities for how that can support the grid over time. If I have a generator or a battery, whatever it is, I kind of have it for backup power if the grid ever goes out because of a storm. But if there's a spike in power prices and my generator's connected, and I can get paid to let my utility turn my generator on for 10 minutes and feed that into the grid, and they can pay me, a lot more than my kind of marginal cost for the gas, that's quite interesting. I think, Stephen, you also touched kind of like power price spikes at different times. If anybody's on a time of use rate where you're paying different time throughout the day, and your demand is causing a spike from something, if you have a battery, the battery can kick in for 10 minutes or 15 minutes or 3 hours, whatever, as it smooth out that spike, and you can avoid that power demand. And so I think as we think about all these demand dynamics, I think backup power and how that supports the grid over time definitely becomes a really interesting piece of the transition.
What's interesting there is, building on what you said and what Marina said, the unit costs of storage are going down just at a time when volatility, to Lisa's point, is going up. So that's a heck of a trend that favors the rapid growth in storage, and yeah, that makes a lot of sense. I waited 20 minutes to talk about AI. I really restrained myself from going there initially. I know it's a topic all four of you all think about in many different ways. We did a recent study looking at the carbon footprint of data centers globally. We came to about 2.5 billion tons cumulatively by 2030. It was much bigger than we expected. Daunting. At the same time, Lisa, you mentioned on the positive side, AI could benefit in so many ways. It could help with grid management. It could help with material science to improve battery technology. It could do so many things. Let's start on an optimistic side of things. For any of you all, where do you see the biggest promise of AI in terms of helping with the energy transition? And then we can talk about some of the thornier problems. But what technologies are you most excited about in AI? Where should we start? Would it be on the demand side?
Yeah, I mean, I can start. I like that long pause when you ask for something positive about AI. That was a bit tense. But I think that kind of to what I said earlier and what Greg said, the demand modeling side, so positioning of new power sources. There's an enormous amount of data out there. To your point about the Grid Status website, you can see the whole US grid. You can derive insights from kind of locations of power that you need to make power use and power supply. You need to make assumptions about where there are going to be new demand centers, how many people are going to have EVs, how many people are going to have heat pumps, how many people are going to have batteries. So you need, I think, the data ingestion and analysis with the application of subject matter experts in the power space who understand kind of how these things work and have worked. That is a really interesting kind of application. If that is more machine learning than kind of just pure AI. I think that machine learning, specifically, the application of subject matter expertise to the problem. You see a lot of companies that are kind of using it to model potential outcomes for different catalysts that could be more energy efficient, for example. And instead of having to continue, make a new catalyst recipe. I'm not a scientist, you can tell, and then put it into the test. You can iterate based on machine learning, kind of what is going to happen if you were to produce it, which massively reduces your cost of production. So I think there's a lot of different applications, but I would say that where I feel most comfortable is in that machine learning space rather than the just general AI. But I think that's where, hopefully after this mania of generating faster and faster and smarter AI is kind of somewhat calmed, we will get to the stage where people are then able to utilize it with subject matter expertise to answer some of the really difficult questions, one of which is demand, power demand or power supply, power location, and the other is just so many different aspects of the transition. One of the things that's really spiked people's interest in fusion recently is that supercomputers and that kind of iterative power of modeling has enabled people to test a lot of scenarios much faster and much more cheaply. Not cheaply enough, not necessarily fast enough, but we're getting there. So that kind of accelerated trend, I think, is very exciting.
It's a good point. I mean, material science for the energy transition, I think many investors don't appreciate how close of an analogy that is to drug discovery and how powerful that's been on drug discovery. Very similar problems in a lot of ways, essentially complex molecular problems where you need to test thousands of candidates to figure out the right catalyst, the right electrolyte, et cetera. That's a big deal. We haven't yet seen a lot of progress, but I expect we probably will. It's a really good point.
I'd say we see parallels, to your drug discovery example. We see ingredient discovery on the food side. We see supply chain sourcing on just general trade and sort of supply chain side, where if you're going to have disruptions, whether it's from weather, whether it's from climate or geopolitical or war or whatever, being able to rapidly adjust your product to, hey, all of a sudden I can't get this ingredient, I need a replacement. What's the best replacement for it? AI is helping people respond to a lot of that stuff much more quickly. And so I think there's just a lot of innovation that's happening, but also just resilience that's coming out of it.
Rena.
So I'd say for better or worse, I think the energy transition is going to be sped up by AI. So both kind of the increased demand for power on one hand and then lowering the cost of clean technologies on the other. Thank you for waiting like 20 minutes, right? I've been making this joke at sort of all the sustainability conferences this year that, it's a good party game. You could, at these events, you could take a shot every time somebody says AI. And then I say, don't do that because you'll die. But the reality is, I think one positive is that these hyperscalers, you have basically a patient, long-minded,
Yes.
deep-pocketed seed investor, for something like sort of, civil nuclear, right, which might take 7 or 10 years to sort of be effective. Like, who else is going to have the patience and the money to wait for that way and then create it for everybody else?
It's really important. We have so many technologies that are in that valley of death where we need patient capital, to your point, Marina, and that's always been very tough. And these days, especially, utilities are very nervous about putting a lot of capital into new nuclear, for good reason, by the way. The history has not been phenomenal, but we need patient capital to get us over that hump. And it is exciting when we look at nuclear technologies. The unit cost could drop if we have that patient capital, but we need to start very quickly. It's incredibly encouraging just in the last month to see the number of nuclear announcements involving the technology sector. So that's very encouraging. I'm going to stay on an optimistic tone and focus on just areas that you all are most excited about. It could be a subsector, it could be a business model, a technology, really any area. I want to give our audience a bit of hope in terms of human innovation, the ability to address this challenge. It's obviously daunting when you look at global carbon emissions, but let's focus on the positive side. So for any of you all, where would you start? Lisa, where would you start?
Yeah, so we're most excited when we talked about the need for dynamism and flexibility on the grid. So we're most excited about power equipment manufacturers that can, supply the equipment that's needed. Companies that supply equipment, critical infrastructure to upgrade the grids. Companies in the nuclear value chain, copper producers, and then companies that supply critical infrastructure to data centers. Those are kind of the areas that we're most excited about.
Greg, where would you go?
Yeah, I'm really excited about a lot of the innovation we see happening around decision making and speed of decision making, especially in times of crisis. Something that we think about a lot is climate resilience, and we're going to have more and more extreme weather and fires and droughts and storms. And a lot of that stuff just happens pretty quickly, and people have to make very rapid, people or businesses, very rapid decisions on how you respond to that. Whether it's a company making a decision about their assets or their aircraft, or people about their lives and do I stay and go, or a utility in the middle of a storm and how do I get my grid back up and running quickly. And we're just seeing lots of use cases around smarter AI influencing that decision making, let people make decisions on the fly much more quickly. And just examples of utilities being able to have a layer that can automatically analyze the calls into the call center, people filling out a form on their website as it comes in, to rapidly kind of triage, is this a problem? Is it a down power line? Where is it? Do I need to send a crew? Even in advance leading up to those things, AI modeling for the storm that everyone says is coming to Florida, where do we think it's going to hit? And use very detailed sort of digital twin modeling of my grid to say, based on all the storm projections, here's the parts of my power infrastructure that might get knocked out. These specific lines, these specific power lines, and poles, these transformers, and let me pre-position some equipment and crews where I think that's happening so we can get up to speed more quickly. So those are just a couple examples, but we see a ton around just operational decision-making influenced by AI that just lets people get to answers much more quickly than humans can on their own.
Great point. Lillian.
Yeah, I come at this from kind of a couple of different angles as I sit in both venture capital and then sort of later stage. I think on the venture capital side, long-dated transformative technologies will always be very exciting. I consistently am just interested in where kind of fusion is going to go. But I think that if nearer term, if you're thinking about kind of pre-2030, which is what we all really need to be thinking about in terms of this resilience to climate events, which seem to be getting worse and worse, is what can you build now that might enable that new economy in the future? And to Lisa's point, power equipment, which is going to be needed in the balance of plant for any kind of form of power generation. So things like high temperature superconductors, which you can use both in fusion and in other applications. You can use them also to upgrade existing grid lines to take more power over longer distances. And it's still kind of early stage technology, but I think that's something that, for the same given grid, so we don't even need to build more lines, we could have more power being transmitted. That would be, a material and very low-hanging fruit change that we could make to kind of build the transmission and distribution whilst we're also building the generation side.
That's a great point.
I mean, I think we've already said a lot of these, but storage technologies, the transmission capacity build out, so intrastate versus interstate transmission lines, wind and solar. Another area of interest for us is e-fuels, so jet fuel from biomass, and this one's like, science fiction, renewable natural gas from methane captured from animal dairy farms. So some of these kind of good areas. I think outside of just wind and solar, it's a lot of the sort of adjacent, technologies. And so we think about like smart solutions, smart meters, insulation, energy efficient lighting, kind of smart building, energy efficient transport. All of these things, I mentioned green hydrogen, also e-methanol, ammonia, et cetera, sustainable aviation fuel. I've been asked on behalf of our equities business to sort of point out that after obviously a period of a lot of volatility in valuations, that we have really a reset, we think, an attractive long-term risk and reward moving forward. So it's not what it looked like in 2019, or rather it's reset back to what it looked like in 2019. So valuations are now no longer outsized, and they're not discounting excessive future returns and expected earnings. That's kind of, again, from their side. And then on behalf of our renewable infrastructure business, I've been asked to point out that the good investment idea right now is buying operating assets versus investing in development projects. I'm going to slow down. And the reason for that is that profit margins for developers have temporarily compressed, lowering the development risk premium. And on the other hand, risk premium for operating assets is at a decade high, as the supply of operating assets coming to market is increasing, while the buyer pool for these assets is not increasing as much. So you have a supply-demand mismatch, which is in favor of folks like our 𝐏𝐀𝐍𝐄 business.
It is interesting. I mean, when we look at valuations, the classic renewable stocks are often not expensive at all. There have been much shinier objects to chase, especially in the world of AI. Nuclear has caught a bid, of course, but it is a little stunning to me that renewable energy has been overlooked. And we looked recently at SMR nuclear technology, and we're very excited about it. But when I look at the magnitude of likely gigawatt development in the United States, it could be a handful of gigawatts by the mid-2030s. Very exciting. Some of our companies do more than that volume every year in renewable energy and have underperformed dramatically. So it's an area full of alpha opportunity, tremendous volatility, but it is interesting to see the market chase some of the shinier objects out there. So.
Yeah. I think especially when you layer in storage and the declining cost of batteries to that, and so all of a sudden renewables plus cheaper and cheaper and cheaper batteries as storage, which gets you closer to base load, which is kind of the holy grail that nuclear solves. It's a race on the cost curve, and to your point, I think the renewables plus the batteries probably present a pretty interesting value proposition.
Well, I think that's quite an optimistic way to finish our discussion. Dropping cost curves. I'm happy to leave it there. Thank you to our excellent panelists for this discussion. Appreciate that.